Hi, this is Randy Finney with Right Side of the Chart, and today is Sunday, May 1st, 2016. In this video, I wanted to do a very quick overview of some of the global equity markets, non-US equity markets. So I'll start in no particular order here. I have Australia up already. We'll just start with that one. This I mentioned as being one of my favorites recently, a few weeks back, I believe it was. I did a video on some of the uh, non-U.S. global equity markets, and this was one of my favorites. As I noted here, positive divergence on the daily time frame as well as the weekly time frame. We're starting out. If I don't mention, just look up here on the upper left-hand corner. The time frame is right there. This is a daily chart spanning 2 years, and a lot of these divergences have played out so far. We've had a move up already looks about 12.5%. You can see this was a key downtrend line. I had that one whipsaw circled. That was a false breakout, but this was the real deal. Looks like a breakout, a back test, and then a nice move up so far. And what I've added to this chart, there are quite a few resistance lines here. So this would be considered a resistance zone, the bottom of which we're at right now. And if you go back to the left, you'll see reactions such as back here, reactions from below. There's a gap a little bit below there, but a couple reactions there. And each line represents anywhere that we'll probably have some difficulties, I should say. In other words, this quick move up that we've had there, this might look like a bull flag action, and could certainly be. That's a flagging action recently. We're back testing or near back testing this red downtrend line I have. But if we get up, I expect to find some resistance at either or any of these lines here. So there's a little work to be done, and my near-term bullish case is a little tempered right now, as well as I'm pretty much across the board, mainly with the U.S., but looking at some other indices. I think we're in probably looking at a broad-based sell-off in global equities in the near term here. Near term meaning coming days to weeks, and possibly beyond that. So again. Uh, if the U.S. is going down and most other global stock markets going down, they're probably going to drag down Australia with it. And Canada and some of those commodity-based countries that I recently mentioned being more bullish on. Like I said, they played out nicely over the last few weeks, but I think it might be time to either start taking some profits or at least tighten up stops. And we'll just look at the weekly chart and then move on. Again, these were covered in detail in a recent video, so I won't go into too much detail. There's that divergent low. You can see the bullish divergence on the weekly time frame here. The red lines denote this bullish falling wedge pattern, which it appears that we've just broken out of not so long ago. And there is this resistance level here. You can see it pretty clear on the weekly chart. That's about 5,400. And there's, going back, it's not super well defined, but again, it's an area, and looking at that daily chart, that we probably could come into some resistance here and see Australian equities struggle. And again, if the global, U.S. markets turn down, and most other countries are going to follow suit. So I'll do the U.S. markets in another video today. Here's Canada via the TSX, and it's some resistance as well up here. Again, Canada was one of the ones I was most recently bullish on, and still, if I had to pick favorites, I would put it up there. As one of the better looking right now. But we've had quite a bit of a nice move off the bottom. We see the divergent low, and so far that's good for about a 22, almost 22% gain. So a lot of that divergence has played out already. And these red lines here, this one was already taken out. That's resistance. But you can see this is pretty nice resistance. We have this reaction high, a couple reactions there, reaction from above, another reaction from above. And so that level is just overhead about, we'll call it 1400. And that's only 50 points on a 14,000 point index, so it's really not too far ahead. This was the potential bull flag measurement. I noted here a couple weeks ago this bull flag pattern, and that would be where that could measure to. But again, I see some other developments here that I didn't point out a few weeks ago. And you can look at the divergence here on the MACD. You see the MACD is curling over, poised to make. It hasn't done so yet, but it may turn down and make a a bearish crossover here, and that would be negative divergence because I'm drawing it here with prices right now making a higher high versus that MACD making a lower low. And we're quite overbought. We don't have the divergence on the RSI, but we are overbought. And as you see, just go back in time and look at each of these overbought readings when we've crossed that 70 level, which is the red line on the RSI. And you can see that prices, struggled almost immediately after that. So again, overbought, divergences in place. At the very least, I favor pullback in the coming weeks here. Like I said, just about everything else out there as well. This is India via the Bombay Sensex. This is a pretty clear pattern. It looks like a large sort of a broadening wedge, descending broadening wedge pattern. And you can see that the Sensex just punched up, failed, and is still not yet taken out that level. Could probably draw an uptrend line here off the lows. It's not super well defined, but certainly something to watch. It's pretty steep. I'll color that a different color. So for those of you that are trading that index or any of the stocks within there, that's something to watch. And we could also draw this into a rising wedge pattern, and this seems to be a common theme right now in quite a few indices. So you can look here down on the MACD. See the negative divergence. The MACD is making either about an equal high against prices making higher highs. So you have negative or flatline divergence, I've heard it referred to as. They're confirming the bearish nature of this wedge. And targets would be, well, you can look at these. These are support levels. And again, none of these are official trade ideas, but the point is I'm trying to align all my trades and my analysis on the U.S. markets with global other major stock exchanges, and right now that's pretty much confirming what I'm seeing in the U.S. markets. So we're most likely in the latter stages of a bear market rally. You can see here on the weekly chart, I mention often how the PPO, when it's below the zero level, the dotted line, as it is now, that defines a bear trend. We had the bear market back here. It was below. This was actually, I believe, if you measure it out, was a bear market in Indian equities, and as you can see here, the PPO was below that zero line throughout most of that. Crossed back over here, and told you it was safe to get back in right there. And right now, we've been under the zero line. I used the 9 EMA, the white line, so we crossed back over here, and we're still well below. So that tells me that until proven otherwise, this is nothing. This recent move up off the lows has been nothing but a bear market rally. And let's look at Japan. Okay, this is Japan. We're on a weekly time frame. I just left the Sensex on a weekly time frame. We started on a daily, so we're going backwards here. Weekly time frame, and this looks pretty darn bearish to me. You can see here this multi-year divergence, negative divergence on the PPO and the MACD against prices making a higher high. And there was a fairly well-defined uptrend line right here, which we've broken down from and back tested. And you can see the pretty sharp reaction on last week's candlestick. See the big red candlestick after the second week of back testing that level from below. So the PPO, I should say, is still in bearish territory, indicating that the Nikkei is most likely in the early stages of a new bear market. So there's one that I'm bearish on. I don't see a lot on the daily chart. I won't spend too much time there. There's some resistance levels, but that weekly chart speaks more volumes to me. The Shanghai Composite, this is China. There's a downtrend line, which we recently tried to punch above, and it looked bullish. It looked legit, but so far we've fallen back, and you can see that at least via the Shanghai Composite, that breakout, I can't say it's failed yet because we're really on the downtrend line. This could still be considered a back test, but we did have this rising wedge pattern right here defined by these two red lines. If I drew it out there, I don't have it on here. We could draw a really flat line or negative divergence under that wedge. So we've had the wedge breakdown. And just from the look of the larger wedge, if you take the bottom line here and this upper downtrend line here, it appears, I could easily see another thrust down within this wedge if indeed it is going to break out for a a longer term move. And if that did, I'd look to target somewhere around that $3,700 level. But I think this breakout here was a little premature, and we may come back in there, especially as I said, if everything else, including the U.S., goes down. So that was a daily chart there, and let's take a look at the weekly chart. Okay, the weekly chart. Japan is just full of these bubbles, these parabolic moves, and parabolic runs typically don't end well. They usually end, with a move comparable to the sharp move leading up to the top, just like we did back here. And here it is. It's the same thing. We had a parabolic run, filled that gap right there. You see that large gap that really kicked off the real impulsive selling in 2008 in the Shanghai Composite, and that's where it failed. Pulled back down. So it's had these few bear market rallies, which have been pretty powerful. Breakdown, that looks like a flagging type action. There's a breakdown on the flag, and it looks that we're flagging once again. PPO remains in solidly under that zero level, indicating bear market territory, just as it's done back here for a while. So again, not a perfect indicator, but just something that helps go into the longer term thinking. And we already looked at the daily chart, so I'll move on. I'm going to do the U.S. markets later in another video, so I'll jump forward to the Footsie. This is London, and you can see nice, pretty decent resistance right here that we just rolled off of around 64.33. We had some reactions, quite a few reactions here from below. We had a gap just below that level right here, and also another reaction from above. So that is, resistance is resistance until taken out. And again, like everything else, we've had a heck of a move up. Now, if we're in a new bull market, which I have clearly maintained, I don't believe we are, then this thing could have a lot more to go, but I don't think so. This is nearly a 17% rally, very likely bear market rally. And if so, then we're coming back down, maybe for another back test of this downtrend line at lower levels. But there's some support along the way. I can put horizontal line here. We have some decent support there. That's a level to watch. And again, if that level gets taken out as it is support, that's about 62.15, we'll call it. A break of that level would most likely trigger some more selling and bring it down, maybe for a back test of that trend line on the Footsie. And weekly chart. Weekly chart doesn't look bad. We had this pointed out here, some bullish divergence, positive divergence within this large wedge type pattern. It did seem to break out a little bit early for a falling wedge, and it's quite above the pattern. But like I mentioned, on the daily chart, maybe we come in back test that pattern, that wedge from lower levels. Maybe it was a failed breakout. Hard to say. Again, from a weekly perspective, this doesn't look bad. I don't want to knock the Footsie too much, but again, near term, I separate my long-term views and near-term, and that's really all I can, see out very accurately. The longer you try to look out, the fuzzier the forecast gets. I always equate stock trading and chart reading to forecasting the weather. They can do a pretty good job of telling you if it's going to rain within the next hour or two, or maybe even the next day or two. But try to forecast the weather out a week, 2, 3, 4 weeks in advance, and the longer you go out, the less accurate the forecast will be. All right, let's move on and look at Hong Kong. Here's the Hang Seng index. There's a long-term downtrend line. This is a weekly chart. Let me see if I have anything here on the monthly chart. Yeah, this one tells me a little bit more. This is a monthly chart going back to 1987. Couple reactions, quite a few reactions. The Hang Seng's really been flirting with it. Broke under and it traded a month below under that uptrend line. Recently got back up. It's still within that danger zone, let's call it. It's in very close proximity to that downtrend line. Or, I'm sorry, the uptrend line. And if it took out the yellow primary uptrend line, here's another well-defined uptrend line at a different angle that's not too far below, and that would be my target if and when this yellow one goes. And that right now that comes in a little bit above 1600, but again, trend lines are dynamic, meaning that they change over time because it has a positive slope for an uptrend line. So the longer it takes to get there, assuming this does break down, then the higher it comes in. Maybe it comes in around 17,000 or so at that time. Let me try to give you a near-term read. Going back to a weekly chart, there's resistance that we're at. a lot of, it's a pretty busy chart, so I don't want to extrapolate too much from this chart. I don't have a very strong opinion. There's resistance there. If we punch up through there, I could add a few more resistance levels. Again, not a very clear chart, so I don't want to spend too much time on it, but just looking at the daily chart here, let's do this. If you're trading the Hang Seng, just look at it, keep an eye on this uptrend line. Here's an uptrend line off the recent lows. If that goes, that will most likely trigger a sell signal. I'm sure there's a lot of traders watching that uptrend line right there. So, and there's also, I should add just below it, some horizontal support there. Okay, the Frankfurt DAX, here's Germany, and we've had, this is a daily time frame we're looking at. This is the downtrend line that I've been following right here. We had this failed breakout here. So the DAX seems to be plagued with these false breakouts, is what it looks like. Because this downtrend line is pretty darn clear. I think anybody charting the DAX, if you're using a log scale like I do, you'd probably have a same downtrend line because that's off the highs back in 2015. Quite a few reactions there. Breakout, failed. Came back tested again, further validating that trend line. And came up through here, and we recently had a breakout again, but look what happened. It failed. And as I often say, fewer things in trading are more bearish than a failed breakout to the upside. So like you can see, when the breakout failed, you have that impulsive selling down, and you can see the move that followed that. So far, there's a failed breakout right there for you. And it also occurred, you can see this uptrend line, that breakout failed, took out that came back in below the downtrend line, yeah, as well as this near-term uptrend line here. What we had here on the DAX is this uptrend line, breakdown, back test up to this point, and now we've rolled off that as well. So what I've added here is an alternative uptrend line. It only has 2 reaction points so far, so just watch that level, and it's something to watch. But you can also note here with the Fibonacci retracement levels from this point here all the way up to the highs. So far, we've retraced that point. Well, that was a retracement back there. Let me put the retracement levels here. This would be more accurate for this recent move up. You can see that we've reversed just shy of that 50% retracement level. We also had this very large gap, if you notice right here, the gap back here. And similar, that's that New Year's gap that I referred to on the U.S. indices, particularly the QQQ. And you can see that we failed right at the bottom of that gap. See if I put a horizontal line there, you can see that's about exactly where the DAX turned down. So that's a level I've been putting a lot of stock into, and so far it stopped the Qs cold in their tracks. So let's move on and look at. Did I cover a weekly chart on the DAX? No, I didn't. All right, here's a long-term uptrend line to watch. So far, this is really a secular bull market, and these are, cyclical bear markets within a longer-term secular bull market defined by this uptrend line in the DAX. But like a lot of other global indices, using this, simple but fairly effective trend indicator with the PPO, the 9 EMA line being below, as you can see down here, the DAX is in bear market territory, clearly. Here's your previous bear market in the DAX. We didn't have in the U.S. at that point, but here that's about a 30% drop. I grabbed it a little high. So there was a bear market in the DAX back in 2011, and you can see, of course, that this confirmed bear market territory, PPO, the white line being below the signal line, and there again during the 2007 to 2009 bear market. So and it did a great job of defining bull market since. So bear market, and until this tells me otherwise, as well as other things that I'm looking at, this is really nothing but a bear market or a counter trend rally. And the big deal is if this uptrend line goes. Now it's not on a scale 1 to 10. It's not a 10. We have 3 reactions, but it's I would definitely consider pretty valid, and certainly something to watch. So if we break down below this line, we're talking, the possible end of that secular bull market that's been in place, since 2009, and maybe a new, more downside to come, quite a bit more possibly in the DAX. And we'll wrap it up with Paris. Here's the CAC 40. And you can see here we're on a weekly time frame, pretty clear stuff. You know, the uptrend line off the 2011 lows right there. Several reactions. There's 1, 2, 3, 4, 5, 6. Breakdown and backtest. I mean, just textbook technical analysis. It's confirmed as were most of those other global indices with the PPO and bear market territory or a bearish trend, sell signal, whatever you want to call it. So that's the chart, and I'd have to say, you know, this one looks like, and again, everything's lining up. That's why I'm doing this video, and I'm probably going to put this video together with some other analysis for a real comprehensive overview of the U.S. markets, some various sectors, and everything else. Because as I mentioned last week on the site, as well as within the trading room, I'm looking at what is a very likely broad market sell-off where just about everything gets taken down. Now, there's always things that go up during a correction. Treasuries, of course, people flock to institutions and individuals will flock to treasuries. But I'm looking at, for the first time in a while, a broad market sell-off. I differentiate that between what we've seen over the last few months, which is sector rotation. Pretty much throughout this year. You know, we did have a broad market sell-off early in the year, kicked off by that January, the New Year's gap down. That was a broad market sell-off, but since then, and even during there, we started to see some sectors doing well. So it's been, again, sector rotation, somewhere you can make money just about anywhere on the long side or short side over the last few months or most of this year. But that may be a little more difficult if we do get this broad-based sell-off like I'm talking about, where even commodities go down. All right, so that would be just, you know, an ideal scenario, or a potential scenario, I should say, for Paris, for France. And there's the daily chart. Not a lot worth mentioning here. I have this potential uptrend line you can watch for a break. There's a gap there as well. So that's a pretty decent support level. So if all this bearish speak that I'm spewing out today, if you're in agreement, not in agreement, one thing is for sure, this is support. These are intersecting support levels. We have that gap right there. You can see where the cursor is. Top of the gap comes in right about that uptrend line. And, you know, if gaps are broken, then it's almost like a magnet to see a backfill. That the bottom of that gap would be like a magnet. That would be your next support level. And if that goes, you just then go down to this reaction low right here. And, you know, one after another goes. And that's where I think where we're at is it's not going to be any support levels. And I'll go over this a little more in detail in the U.S. markets. If we're at where I think we are, this is a stage where these support levels are, if there are any reactions, at least the near-term support levels, they're likely to be broken very quickly, and in some cases just shattered right on through. Whereas you have a more trending market, a little more stable uptrend or downtrend, you tend to get those bounces you can play a quick trade off of or position. But again, we're not there yet. But if we are where I think we are, we'll probably see these first few support levels smashed right on through. And of course, there's always the other alternative. If I'm wrong and we continue higher, then, you know, flip it around. Your next resistance level would be the previous reaction high right here. So you want to see that taken out. However, we have this pretty decent downtrend line, which we've yet to tag, this red downtrend line. So for the near-term bullish case on Paris or in France, we'd see this move up. You know, maybe this top of the gap holds support in the uptrend line, we move up there. But I would expect a reaction at the initial tag of that downtrend line, meaning the first time, if and when we touch it, a reaction is either a pullback and or consolidation at very best, even if we're going to go on to punch up through it. Of course, the other option is that we, you know, near term, maybe my call for a correction in the broad markets and most most global equity markets is wrong. So maybe we go up for a couple more days, a couple more weeks, hit that trend line, and then roll back down. But again, take it all into context. Look at the U.S. markets, look at the Asian markets, European markets, because it is a global marketplace. You know, there are disconnects over time and different trends, but for the most part, when you have those powerful sell-offs or those powerful rallies, they pretty much lift all the markets. Most of the global markets move in tandem. So okay, I'll wrap it up here. This has been Randy Finney with the Right Side of the Chart, and I'll try to get to a few more sectors in the U.S. markets a little later today.